Hi everyone, in this video we want to share with you the 5 attributes of solid investors and show you how you can be one as well.
Okay, before we carry on, we would just like to introduce ourselves. I'm Joe.
And I'm Sarah.
We are a husband and wife team, and for me, I am Mr. FA, Mr. Fundamental Analysis. What fundamental analysis does is actually go through a very logical approach, and the ultimate aim is to collect good businesses at a very sensible price.
And I compliment the man, by reading market trends so that we can enter and exit on time. And we believe that together,
we are better.
Okay, so if you'd like to get connected with us, you can actually message us on Facebook or you can just leave a comment in the YouTube channel below. Okay, so the solid investor that we would like to study in this video is Warren Buffett. Okay, why is he the investor that we want to study? It's because we think that he's the most solid investor. And why is that the case?
Alright, Uncle Warren here, actually he has a net worth of 73.5 billion. For me, I also have it. Okay, in terms of bills, dollar bills, I have $73.5 but no billion.
Okay, that's why we want to model after him and become a solid investor so that one day we can also be the next investor that's on the top 5 Forbes list. Okay, so one interesting thing to note, right, is that Warren Buffett is the only investor on the top 5 Forbes list. And interestingly, you don't see any traders on the Forbes list. Okay, this is also the reason why Joe and myself, we choose to be long-term investors rather than traders. Okay?
So, because how does he compound his wealth? He actually achieved consistent annual returns of 24%.
Alright, so what is 73.5 billion today was actually 5k, okay, when he was 14 years old. He started off with 5k. And if you have 5k today, and if you are able to model after him and make consistent returns, one day you could also earn your first billion. So are you ready to be a solid investor to earn billions? If you're ready, let's go.
Let's go, yes.
Okay, S stands for
system. Okay, Warren Buffett, his system is really just to try to buy businesses with good to superb economics, okay, and to buy them at very sensible prices.
Okay, so it's just two things for him: buy good businesses, and second thing, buy them at a sensible price. And this system for him has produced 24% annual returns, and that has resulted in his billions today.
Okay, one very noteworthy thing is that, okay, a lot of us may think that, oh, he's the most successful investor in the world, you know, he must have some very complicated concept, some genius formula. But look, this is all, okay, if he has to condense his whole philosophy into a statement, this is all he's trying to do, and it is super simple and replicable.
Okay, so the average investor, most investors out there, right, okay, they actually said to say they don't have a system, okay? So they actually tend to follow the investments decisions of trending gurus, and because what they do is follow, right, they don't really have a clear decision making framework, they don't have a clear system that they actually stand by, and because of that, okay, they achieve inconsistent results. Okay, what we want to do here is we do not want to remain as an average investor. Okay, we want to grow and we want to be a successful investor someday that has $1 billion net worth. Okay, so how do we get there, Joe?
Okay, so how do we move from average to successful? Okay, the successful investor, like Uncle Warren here, okay, they are very steadfast in their system. Okay, what kind of system? The system to select good companies with very good and strong economic moats. And with this single system, okay, they are able to achieve consistent returns with this.
Okay, so you don't have to be creative, you know, you don't have to invent your own system. Okay, what you can do is you can follow, okay, models that have proven results, like for example Warren Buffett. Okay,
alright, you don't have to invent your own system, okay, but do modify it such that it suits your own investment style, your own risk appetite. So the point here is not to follow the gurus' decisions, not to follow their choices, but to follow their way of thinking, to follow their model or their system.
Right, that's right. Okay, so O stands for overly safe. Okay, so what's overly safe?
Okay, for Mr. Warren Buffett here, okay, he says that you don't drive a truck that weighs 9,000 pounds across the bridge that has a weight limit of 10,000 pounds because you can't be sure about it.
Okay, so even the strongest investor, right, they have a huge margin of safety, all right, and they tend to be overly safe. Okay, so how does an average investor usually do it? They actually they actually fall prey to this all-in mentality. They would think that, okay, this stock is different this time round, I'm going to go all in, and because if I don't go all in, then I may miss out. Okay, and this actually is very dangerous because they are putting all their eggs in one basket. And when they do this, right, it's also an indication that they have no risk management plan. They do not have a plan B. Okay, so if let's say we are here right now, how do we move to the stage where we become a successful investor?
Okay, I think you may have guessed it. To be a very successful investor, you really need to be strategic in your portfolio allocation. You really need to diversify your portfolio. Okay, and not only that, you really need to have a very clear risk management plan.
Okay, do know that even the best companies, right, okay, can fall, okay, due to a black swan event. Okay, so personally for us, okay, we allocate at most 10% per share. No, even though it's a very good business, it has fantastic fundamentals. Okay, but we can be wrong, right? We can be wrong, and therefore portfolio management and allocation is extremely important. Okay, so on to L. Okay, L stands for
long-term perspective. So Warren Buffett says, if you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Okay, so the key here is to really put together a whole portfolio. You see, even Warren Buffett diversifies a whole portfolio of companies and whose average earnings, okay, go up over time. Okay, and your portfolio market value will also go up over time according to what companies you have.
Okay, so the average investor, right, actually, I think they actually have this perspective, right, that they have to enter and get out of the market very quickly. Okay, so they actually have a very short-term perspective. But actually what happens, right, is that when they enter and come out of the market very quickly, right, okay, they actually end up paying a lot of money to commissions. Okay, whereas for a long-term investor, right, when they buy and hold, they actually save much more money on commissions because they buy and hold and they allow, okay, for whatever earnings, right, to compound, okay, and continue to grow. Okay, so an average investor also tends to execute trades in bits and pieces with no kind of long-term outcome. And because of that, right, because they don't have a long-term outcome, right, okay, they don't have a shield for their emotions. Okay, and they tend therefore to be very affected by temporary paper losses in the portfolio and very affected by short-term price movements.
Yeah, so how do we get this shield for emotions? Because nobody can actually run away from their own emotions unless you're a zombie or a robot. So to really develop a shield of for the emotions, okay, the best thing to do is really to do our own research. Okay, we must have a very long-term perspective to hold the stocks for the long term and really be patient to allow the returns to compound and develop our ability to be unaffected by the temporary losses or the paper losses in our portfolio.
So don't be afraid to hold stocks. Don't be afraid to hold stocks. In fact, this was how Warren Buffett compounded his 5K to 73 billion today. It's simply by holding. All right. And you will also, if you follow the news of Warren Buffett, you also will realize that he doesn't sell his stocks very often. Right. Okay, so on to point 4, which is I stands for
intrinsic value.
Okay, so like what Warren Buffett says, it is very important to differentiate between price and value. Okay, so when you buy into a company, don't look at the price, look at the value of what you are buying. Okay, an average investor, okay, actually has no clear entry and exit plan. And what is one common mistake that they do, right, is that they sell off fundamentally good companies when it has yet to perform to its full potential, which also means that they have no idea what is the intrinsic value of the company and they are driven by price instead of value. Okay, and of course we do not want to remain here, so how do we get to the next level?
Okay, so having a very good valuation method, having a very clear idea of how to do valuation and how to select the fundamentals of the company is super important here. Notice that we have actually talked about this quite a number of times, and really we believe that this is one of the surest and the safest ways to really develop your shield, okay, for your emotions.
And what's more, right, is that when you understand the valuation and the fundamentals of the company, you also will know exactly when to sell. Okay, so then because of that, you will have a very clear exit plan, and you need not be so concerned about the short-term market movements. Okay, and finally, D stands for
do homework. In fact, we really believe that this is the most important one. And when we do our homework, we really know what we are doing.
And when we know what we are doing, naturally, that already is a margin of safety in itself.
Okay, so the average investor really they follow the tips, the stock ideas, and they just go in without really without thinking through whether it is suitable for their portfolio. And therefore, when the price movements move, sometimes when the share price drops a lot, they are now shaken because they do not know what this company stands for. They do not know what this company does. They do not know, very importantly, the secret ingredient that makes this company stands out above the rest. So when all these short-term price movements happens, they become afraid and they may want to sell, and that's the worst time to sell because the share price usually has fallen by quite a lot.
Okay, so the keyword here is blindly. It is really perfectly alright, okay, to get stock ideas, okay, from other people, okay, but the most important thing is you must do your own homework based on your own system. Does this company and does this price point make sense for you? Only if it does, then you enter into it. Okay, if not, you're going to be swayed by emotions. Okay, so how do we level up from an average investor to a successful investor? Okay, there really is no running away from this. The only way to do it is to read financial statements and annual report, because that's the only way for you to know the business inside and out, so that you have a very strong conviction, because you know very clearly what is the mode of the company, what is the risk of the company, and that will then enable you to value the company better.
Okay, and I really believe that Warren Buffett is the best role model and example for this thing. Because why? He reads 500 pages a day, and he has this very famous quote, most men read Playboy. For him, he reads financial statements.
Alright, so if you really want to level up to be a successful investor, you have to level up, really. Alright? Okay, so in summary, these are the 5 attributes of solid investors. Okay, S for system with replicable results.
Okay, second, overly safe.
Okay, thirdly, long-term perspective.
Fourth, intrinsic valuation.
And last and most important, do homework. Alright, so let us know what you think, okay, about these 5 attributes of solid investors. And if you like this video, do remember to like and subscribe to our channel and share it to those who also wants to be a solid investor.
Okay, that's all for this video.
And we will see you in the next video. Bye.
Bye-bye.